The new week begins with crypto markets in a rare state of quiet balance. After several sessions of tight consolidation, Bitcoin trades near $112,000, while Ethereum holds around $4,000. Volatility is near its lowest level in weeks, and liquidity continues to improve. The next directional move will depend less on emotion and more on flows, data, and macro stability. Technically, the market structure remains symmetrical. Support sits between $105,000 and $110,000, the same range that absorbed last week's selling pressure. Resistance stretches from $115,000 to $120,000, where recent rallies have paused. Until one of those boundaries gives way, the market remains neutral, neither bullish nor bearish, but poised. Ethereum mirrors this pattern. Its price continues to oscillate between $4,000 and $5,000, showing resilience without breakout energy. Developers and staking flows provide a solid base, while traders remain cautious after the rapid swings of early October. A sustained move above $5,000 would confirm renewed leadership. Failure to hold $4,000 would extend the range phase. Derivatives metrics offer additional insight. Funding rates across major exchanges hover near zero, reflecting an even balance between longs and shorts. Option skews have flattened, showing that traders are paying roughly equal premiums for upside and downside protection. Open interest is rising slowly, suggesting re-engagement without the speculative leverage that fueled earlier volatility. Institutional behavior continues to act as an anchor beneath surface noise. ETF creations still outpace redemptions, reinforcing that long-term capital is flowing steadily into digital assets. While daily inflows remain modest, the consistency of participation matters more than size. It signals confidence rather than speculation. In previous cycles, this kind of slow accumulation has quietly built the foundation for sustained recoveries. Macro conditions remain the main variable. Markets are awaiting the next round of inflation data and potential trade-related policy headlines. A stable or weakening dollar would support risk sentiment and likely encourage another attempt at a breakout. Conversely, renewed strength in the dollar or a shift toward tighter policy would keep the consolidation intact a little longer. Technical momentum indicators such as RSI and MACD have now returned to neutral readings. This neutrality, though often overlooked, is the reset required for durable trends to form. Markets rarely move directly from panic to euphoria, they rebuild conviction in stages. That rebuilding process is exactly what current price behavior suggests. Looking ahead, three scenarios define the path forward. The first is continued stabilization, where Bitcoin and Ethereum remain range-bound while open interest and liquidity grow quietly. The second is an upside breakout, triggered if prices close decisively above $120,000 for Bitcoin and $5,000 for Ethereum, drawing momentum traders back in. The third is a renewed correction, if macro pressure or low liquidity forces another dip toward $100,000. At this point, probabilities are balanced among the three. The deciding factor will be flows, whether capital continues to trickle in or retreats to the sidelines. Markets find direction not from predictions but from participation. Once consistent inflows align with stable volatility, the next trend will reveal itself naturally. For now, observation is the most rational stance. In calm markets, patience and preparation often outperform reaction. The structures are set, the noise has faded, and data, not emotion, will determine the next chapter. Whether the coming week delivers a breakout or simply another round of testing, the foundation is forming. And when confirmation finally arrives, it will not be with excitement, it will be with balance. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.